Good evening, ladies and gentlemen. I'm Joe Keenahan, back at you after a one-day hiatus. You had Steve Q. Quirk yesterday. It's Wednesday, January 4th, 2008, and welcome to the worldwide headquarters of thinkorswim. All right, today's market action. The market did sell off, Dow down about 12.5 points. However, we saw it rally back. It was at much worse levels earlier in the day. Ben Bernanke spoke earlier in the day, caused a lot of inflation fears. Let the world know we're not out of the woods yet by any stretch of the imagination. We saw a little bit of this earlier in the week in some of the financial stocks, etc. So Ben was there to remind us that it's not all rose-colored glasses for the rest of the year and as we head out. Interesting levels, wasn't here yesterday, didn't get a chance to talk about the fact that these S&Ps, we're back under 1380 on these right now on the futures. And what happened at the same time? VIX almost up to 21. Again, these are the readings we were saying. This is turning into a little bit of a bearish scenario now once we started closing there. Be interesting to see if we hold on to the VIX above 20 with the S&P still staying down this level. Now we have to break back above 1394 even on them in order to say that we're a bit out of the woods. So interesting levels we've talked about them time after time, something you should probably keep your eye on as we head forward. All right, what else do we have going on? We have initial jobless claims tomorrow morning. Claims, easy for me to say. Anyway, we have initial jobless claims tomorrow morning, so you want to keep your eye on that. Kind of a minor number because Friday comes the big number, jobs. It's really, as always, one of the big, we used to always call it unenjoyment in the pits, but really it's a number you're going to have to keep your eyes on. It's going to give us a better gauge of inflation. If we shed jobs again, that'll be the most consecutive months that we've shed jobs since March 2001 to May 2002. So remember, that was not a good time in the economy. We shed jobs 5 months in a row, so again, let's keep an eye on that. Lehman again in the news, front month volatility 160%. Some trading opportunities still exist there as we've talked about for the last couple of days. Something to keep your eye on once more. All right, as always, thanks for joining us. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim. As always, good health, good trading. Thanks for joining us today. Bye-bye.